Good morning, everyone. Welcome to another class of the London session. Let me just move a few things around and then we're going to get going. Now, today is a shortened day. We do have President's Day in the US. That doesn't really apply for the European markets, but we don't really have many European markets anyways. We do have the currencies. They do offer some opportunities, but frankly, I'm not that big of a fan of Forex futures because they're pretty quiet these days, even though I used to be a Forex trader many moons ago. It's been quite a few years since I actually traded Forex. Now, if you're here for the first time, my name is Deeyana Angelo. I'm better known as Market Stalker D. I have been trading for 18 years. I am Series 3 qualified, and I specialize in some of the more alternative markets, so I don't really trade NQ. Can't stand the thing. I do trade DAX on the indices side. However, my products are generally things like precious metals and energies markets. So mainly crude oil, RBOB, which is gasoline futures, natural gas, and now also copper and platinum, which I started grappling with a lot more in the last year when crude oil decided to go quite a bit quiet. And that's still the case. So on most days, crude oil only has about 100 tick range. And that's like considered a great move. To give you a little bit of an overview how it used to be, crude oil used to be one of the crazier products and used to be the most popular product on Topstep as well. So that's definitely changed. And most days when I'm looking at a crude oil chart, I'm wondering if my internet is on. Now, when that starts to happen, it's time to move products. So last year, I've been doing a lot of exploration and data gathering to see whether we can have some of the other products that could be of interest. And I found success in platinum, copper, but they do have their own volatility indexes, which have to be absolutely tracked in order to get good trading opportunities. And whenever platinum falls below 25 of its own C-vol, it tends to be very quiet. And similarly for copper, that number in its own volatility index will be 20. Some of the other products have very differing VIX expectations, like for example crude oil, when it's over 35 OVX, it tends to offer some better movement. And similarly with DAX, anytime it's over 17, it tends to offer really nice day trading conditions. So as long as you keep track of those, then you should be fine. Now, something was happening last week on platinum. I was stalking this whole move, so managed to get a short one day and then this big short the next day. I wasn't in on all of this, but I was in probably at about 2/3 of that. And I could have held it longer. You always feel like you're leaving things on the table, but that wasn't the point. I had a particular price in mind where we should come back to, and the fact that we did all of that in one day is nothing short of remarkable. Now, at the moment, we're still sitting in a demand area, and you could look at the platinum chart as sitting in a reactionary demand. Why do I say reactionary? Because there was some demand here after breaking through some supplies, and then we just did very little for a few days before moving higher and then smashing back into it. I have a gamma wall area around 1020. Platinum tends to really respect these intraday, and I had 1050 as my orientation point in those 2 days last week. That remains the case today, but whether it's a little bit too far, I'm not entirely sure, because, expecting to have 2 decent days movement and then yet another monster move is not where it's at. And I think this is where people who have a big day, one day they sort of get stuck in that dopamine rush where they now always expect to get some monster movement, and that's just not the case, right? So whenever you have a big day, you need to step back a little bit and just go, whoa, okay, that was nice. Now what? So when that happens to me, whenever I catch like a monster move, I tend to have a little bit of a break from trading. And just to, allow the dopamine levels to come back to some normality. But we do have some movement this morning, albeit it's not a monster move. This might kick up a little bit as we get into the overlap, but just beware that we will be closing everything today early. I do believe that the live accounts, we have to be flat before, so my time GMT, that would be 5:45. But combines, I think combines and XFAs need to be flat by 5 minutes before 6 p.m., I believe. So, it's still a decent day. And if you're trading alternative products, that's when they settle anyways, right? So copper settles at 6:05. Platinum settles normally at 6:30. So for us, we won't be missing too much. Now, if you're somebody who likes to trade the afternoon session over across the pond on NQ, you're not going to have that today. So just really be careful. And don't expect super miracles, however, because it's expected to be a lower volume day. We could be in a situation where we have some irrational moves that just kind of keep going in one direction. On the other side of that, if nobody's trading, it's going to be super quiet. So if you're expecting, crazy momentum movement today, maybe not the best day for that. But the low liquidity introduces some problematic areas in strategies because you can get a lot of slippage and stuff. So I'm just going to have a look at NQ ladder. I mean, that's a bit thin. So we have a couple of ticks spread, 2-3 tick spread. Again, not terrible, but still I would like to see that a bit tighter. The contracts are few and far between. So there's 1, 4, 2, 4, 2. That's very thin for NQ. So be very careful today and maybe wait until that populates at the very least. And then maybe, grab a few ticks here and there. Don't expect super momentum and be happy, right? So we have to match the day's expectations to our strategies. All right, so let's go back to platinum here. So because of the expectation of this being a quieter day, I'm going to make this into more of a class rather than actively looking for trades and explaining things. I can explain what I'm seeing, and I can start to maybe do some analysis here just to have some larger time frame levels. So let's start from the weekly chart on platinum. So what do we have on the weekly chart? Well, we have a massive selling wick, but it ended as a doji. Now, is it possible that this starts to go higher? Yes. How are we opening today? For London, we're going to open below value. I don't even need to look at anything to tell me that we'll be opening below value. Why? Because the move was so massive. So we went below a whole bunch of levels, and now we're kind of sitting below that 1020 level, which was actually my ultimate target that I was looking at. But like I said, I didn't hold it. I was happy to get, I think 1035 is where I took it. So, not too bad. Could have taken more, obviously, but, that's always going to be the case. So, what am I looking for? If we get up to the gamma wall at 1020 on platinum and we see some sellers, that could be another small short today. There is a danger that this whole wick starts to get taken out and we get a continuation pattern on the weekly chart eventually. That is definitely a possibility and something I will be putting into my hypos. Why? Because we still have this area that was reactionary from this weekly chart. So we smashed through the supply, touched it, carried on higher, and now we seem to be settling into a new higher area. Kwang says, I would like to ask you if you could answer in 2 sentences what type of trader I am. So I like to mold my day and my strategies depending on whatever the day offers me. So But gun to the head, if somebody said, Dee, what sort of trader are you? I'm a mean reversion trader. Okay, that's where I'm most comfortable. So if I get my big mean reversion opportunities like the one on Platinum, that is what I look for, right? But those are not going to come every day. So you can't just be a mean reversion trader, right? If you're going to do this seriously over a number of years, you have to learn how to trade ranges. You have to be okay with doing a momentum breakout trade every so often. So you can't just go blinkers, mean reversion, done. Because that's going to mean you're only going to trade on certain days, right? So you have to really wait. However, when you do this for a living, you can't wait. You have to trade every day. And, the prop firms that I worked at before, they had this requirement that you had to trade every day. So you had to pop in at least one trade every single day in order to keep the account active. Topstep doesn't have that. Topstep actually wants you to do one trade every month to keep the account. So it's a very different ball game now, and in many ways easier if you're that sort of a trader where you have one strategy that works for you and you're willing to wait until the days come. But from what I've seen, okay, in my coaching, both private and now through VIP, people love clicking those buttons. And the only way you're gonna generate income every single day is if you start to learn how to grapple with different market states. Luckily, Profile offers us a way to look into the market state from a slightly different perspective. And it definitely offers you some statistical probabilities over what to expect, even at the open already. So for example, when you open inside yesterday's distribution curve, like let's say that we didn't move since Friday, right? So we're still in the same area. The expectation is that until that area breaks, you're going to have the markets acting as an elastic band. So for me to start doing some mad mean reversion trades on those days, it would be frankly not very smart, right? So what I try to do, I put on my Dolby hat and then I take a look at the market. I find session highs and lows, and then I wait for liquidity sweeps around those in order to run sort of a micro mean reversion, I suppose, down to the middle of that range. So that can be point of control on the day, it could be volume point of control, it could be VWAP, it could be session VWAP, it depends on what the day looks like. But then some days I see that we're going into a breakout sustained auction with the trend. So this happens a lot on DAX, for example. Now with DAX, I do like to run more continuation trades, so not so much breakouts, but let's say we have an established initial balance, we go above it, then we sort of go into a partial failed auction, touch overnight VWAP, and then it goes again in that same direction upside because it's an equity index. That's actually a trade that I do a lot on DAX, sort of a fake out failed auction, touch of Globex VWAP, and then up we go. So again, that is more of a trend following strategy. And, it doesn't really make sense for me to be shorting DAX all the time because I will be, I would be having my face ripped all the time if I try to do that. So, some critical thinking in your intraday plans should be a part of your overall approach to the markets rather than just, I'm a mean reversion trader, that's all I know. Or, I'm a trend follower or I'm a momentum trader. There are days for those strategies, and then there are days when you have to think things through. So it's okay to have a label and a specialty as a trader so that you can get in on your massive opportunities, but it's all of the other days in between that tend to hurt people the most. So if you can work on developing your skills so much that no day really hurts you particularly, and then eventually you even start making money in those days, that is really the best choice and really what I believe describes a professional trader, right? The ability to identify what type of a day we have, the ability to jump on a move that is not maybe your strongest point and still to end up profitable. So if you can do that, then you've got a long career in this game. Some people get there faster, other people never get there. It's very difficult. Trading is one of the toughest skills that you will ever learn, not because it's rocket science, but because it's you versus you, right? You're not fighting anyone else. You're fighting up here. You're fighting the primal side of you versus the rational side of you. All right. Black says signed up with Topstep, made the first $340. Very good. But I need to learn more about Nasdaq. You don't actually. There are other markets out there. Buzzy Trades says W through D. W through Buzzy Trades. Trapdoor X says my catalytic converter got stolen, so the supply of platinum is up. Okay. Yeah, sorry to hear that. Yeah, the supply is up. Yeah, platinum running out. I do live in the UK, Black. Yes, I am a naturalized British citizen, but originally I grew up in Belgrade, former Yugoslavia. Over the years, they changed the name of the country so many times that even I lost track of how they call themselves. But I think it's just Serbia now. Someone correct me if that's wrong. I do go there every 6 weeks or so to visit my mom, because she still lives there. But yeah, I call London home, and actually very soon I'm going to be calling Surrey my home. Kwang says DAX has better movement right now. DAX always has better movement for London, right? This is one of the reasons why I've been campaigning to get DAX into Topstep, because that is the product for London, as is Bund, right? Bund is London specific, Eurex specific. And really, in order to get any sort of serious trades during these early days and without kind of scalping 30 ticks on GC, we need to have DAX, because DAX, in the space that GC does really little, very little for the first couple of hours of London, DAX has already moved like 100 points, 150 points. But here we're basically trying to find opportunities in the products that we already have on Topstep, in the expectation that Topstep will bring us Eurex at some point. Now, most of you were there when MP was talking about getting Eurex. Apparently they ran into some problems with it because we have the USA dashboards. I don't know what's going on. I'm not a part of their IT team. But yeah, at some point, in Serbia, we have a saying, right? From your lips to God's ears. So hopefully that applies here as well. But I am going to put that post that I push in your faces all the time. This is the one way that we could do this, if we can have enough people to have enough votes on this post that I just put in chat. You know, if we can maybe push that up to 400 or 500 votes, they may consider getting it back towards the top of the queue. Jamie Garcia says, London session is so boring. Well, not on DAX. Not on DAX usually. It's boring on these products because these are out of hours markets, right? But again, you say boring, and yet some people love trading NQ for this market. They love to fade it. And then we get some actual movement as the overlap starts happening. Whoops. Now, let me show you how much DAX is moving today, because it's already going into a bit of a zombie rally from what I can see. I am going to drag over the platform where I do have DAX. So let me just pop in a couple of things here. And then just give you the reason why we need DAX on here. Okay, so everything else, pretty bloody quiet, right? Even gold, not really doing all that much. It's sort of wicking around, like kind of going up, but not really. DAX already moved 146 ticks for the session, and already sitting at almost 200 ticks for the day. Okay, so that means Eurex, London Open, everything is going up, up, and up. So this is where I would be looking for a test of VWAP and then further continuation. So I don't really like doing breakouts, especially not when we're coming into the statistical ranges. Let me also grab some options levels for ES that I like to convert into DAX, which gives me more of an idea of what they want to do with it. And sometimes you can have short scalps, but they're just not, like, they're so dangerous. They're so dangerous on equities unless it's like later on in the day and blah, 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 all of that. So let's see. All right, so we have some calls converted from ES up at 22,800 on DAX. This area is full of gamma exposure levels. Now, it's going up, but at some point, those gamma exposure levels are going to start causing a bit of an issue. Once we get to 22,800 on DAX, I do expect to see at least some sort of sell-off. Not a massive one, definitely not a massive one, but then maybe a return at about 77.50 or so. Maybe 77.60, so just a little bit of a sell-off before we carry on maybe higher. But 22,800 is definitely a level to watch out for. It doesn't mean that it's going to stop there because it's an equity index. They're absolutely crazy. You can get up to those call levels and then more call buying happens, which pushes the market even higher. And we see that a lot in products such as SPX. So, you have a perfectly nice call level with a lot of volume, should give us a reversal, and then they just keep buying through it. So, you have to understand what these levels are for rather than just using them blindly, especially when it comes to options activity. On the downside, like let's say that we have a really nice sell-off. If we get to 22,600, I would be looking for very strong longs. So that would be where I might pop in like a little bit more size, like a third of the size more than I normally do. And then if we go down all the way to 22,500, that was a pivotal level in the past. So that will be super, super strong, big mean reversion. And if we are there in any sort of sensible time of day, I would be definitely getting involved around there. If I were to further explain how I trade, I will intentionally let the first move happen. I will let them do whatever they want to do with it. And then I will pounce. Not always, because if I have a supply on a weekly chart and a daily chart like I did on Platinum, I did let them do their London thing. And then I only entered, I think it was like midday before I even entered this. And this was done on my live account as well as in this combine. So it was the same trade, ran exactly the same thing. Can we analyze gold? Yes, but let me just tackle Testino's question. Do you have expectations on the 600 ES wall being taken at 614? So I haven't looked at ES yet this morning, but I can have a look for you if you just give me a little bit of time. To get my ducks in a row. Right now for London, we have a neutral day type. So that is one of those things where I wouldn't expect just a straight up and up move. I would expect a little bit of wiggle room. I would expect some visits to VWAP. I would expect the market to not just straight up shoot like a rocket and leave these areas. So right now, even if we kind of break, which were the levels that you were looking for? 614. Yeah, so if that breaks, that means nothing to me, right? So I would be interested in the session lows during the London session. Once you get the New York session, players change, right? You have new levels, new everything, new initial balance, and new reference points. But yeah, I don't see anything at 614, 6,140. I see that maybe if we can break 6,137 and fake it out to the downside and then reverse, That will be one play. We are sitting at all-time highs, though. That's always tricky. And, are they going to break it? Are they not going to break it? What's going to happen? Nobody knows. But I'm going to err on the side of them going even higher at some point this week, not today. Not today. We could have a low-volume zombie rally that just keeps going, doing a similar thing that DAX is doing, but maybe not yet. Because Asia didn't do that much with it. We had a typical out-of-hours sell-off. So now London is taking it back the other way. Is the first hour of the New York session going to take it back down? Maybe. Because they do that, right? Somebody asked here, I think a week ago, how often do the sessions go counter-trend, the previous session go counter-trend to the next one? Very often, okay? Very often. You have Asia going one way, London taking it the other way, and then New York steps in and takes it yet another way. But usually after the initial balance is over. Sometimes only during the initial balance. So you can have Asia down like we have on ES, London up, first hour of New York down, and then a failed auction long, and they keep going. So that is something that we've seen quite a lot. Let's have a look at gold. If I can find my mouse, that would be really good. All right, let's also drag out some of the levels specific for gold so we can, again, get more orientation. Are we in J? We are in J. I'm actually surprisingly awake this morning. I think it's probably because I had a very quiet weekend, so I'm quite with it today. Usually I'm a little bit loopy before midday because I used to be a night owl. All right, so we have a gamma wall at 29.30. We have a high volume area from 0DT options at 29.15. Usually on the first test of those, we tend to have a sell-off. And somebody asked whether gold looks heavy. I mean, after last week, yeah, it's going to look heavy, but is that still appropriate for today? I can see this going up at least to the newly formed supply, which is at 29.30, which is where that core resistance gamma wall is. So I can see it rising up. Somebody put eye on the tiger. There's a theme tune. So I can see this supply, because this is now a supply, getting tested. And if you watched at the buzzer, Coach Paul was explaining some stuff fundamentally, how Ukraine war might be coming to an end. That would cause a sell-off, right? Because we've had this uncertainty over the new USA Trump regime. We had the Ukraine war, Ukraine-Russia war happening, all pushing gold to high heavens. And sometimes we've seen these products consolidate just under these big sort of like 3K levels and then go into huge sell-offs. So is it possible that gold keeps going down? Yes. Is it going to happen today? I don't know, because I can see what you can see. I can tell you that I have a level of interest at 29.30. Remember that our job is not to predict anything. Our job is to collate data, levels, and then to wait for reactions around those levels. It is not to, Dee said 29.30 is going to be the sell-off point. Let's just plow in like lunatics. No, it's like Dee said 29.30 might be an area of interest for continued shorts, but we still need to make sure that somebody with much deeper pockets than us is also looking at that. We're talking people like hedge funds, people who have oodles of money to spend and move the markets, right? Not you, not me, not your mate Dave down the road who's trading, 1 micro of NQ on a simulated account. Okay, so just keep that in mind. So when I say a level, it doesn't mean plow in. It means put it on your chart as a level of interest, exactly like we use kickoff levels from Hogue. It's an area that is technically interesting, but we still need somebody else to be looking at that and going, yep, that is a good level. That's where we have a ton of orders. So 2 things I can see is that GC has a newly formed supply from a technical standpoint, but we also have some call levels at that point as well. So those 2 combined could mean that the market makers might be looking at that area with a bit more interest, okay? So yes, shorts might be on the cards, definitely, but for now, I would definitely be looking at the test of 29.30 before I do anything. Okay, so does gold look heavy right now? No. We have a higher high on the 30-minute chart, so let me show you that. Gold actually looks pretty light to me, so it's got wings. So what do we have? Just purely from the most basic standpoint, there are a couple of things that they could be doing here. So there's an HVL, so high volume level from the options chain. If we confidently go above that, we will see the rise up to the 29.30. If this is just a liquidity grab by the way of smashing through Asia highs, popping some stops, we could go down to VWAP at 29.05 and then carry on higher. But if that doesn't happen, because right now I'm seeing that the volume is just waning completely. This is where volume does assert. I'm not a huge... there's a bit of a misconception with me because I said, I don't really use volume. But I said I don't really use volume. Not I never use volume. I do use it. These are futures, guys. So I do use it. And here's how I use it. So if I'm looking for a pump through a level and continuation, I want to see volume rising. But by the same token, if I'm looking for a short, I also want to see that short volume rising, right? And look at what's going on here. I can barely see these two bars. It's like, are they there? Are there bars anywhere? What is going on? And similarly, let's have a look at GC from this point of view. Gold is still thin, right? It's still thin. We have some contracts at 29.13.5, so that's probably going to go. What they like doing is smashing through those levels where there are more contracts, but that doesn't mean anything if it's not accompanied by the rise in volumes, right? So right now, this is a no man's land for me. It's like, it doesn't want to go up, doesn't want to go down. We smashed higher, didn't manage to hold it. And on the downside, the volume is dwindling. That is not what you want to see for a good trade. Volume is what makes the markets, right? Especially in the futures. Some of the other markets that are decentralized, like Forex, for example, it's got a lot of transactions that are not actually done on any sort of an exchange. It's done in resorts, in hotels, in random exchanges on the street. So not every transaction will be recorded, and you can't track the volume of those either very well. So the volume that you get in Forex away from the futures markets, it will be very much broker-centric, right? So whoever's doing the transaction, that's where the volume will be. But it's not true volume. Now, in the futures, we do have a portion of the Forex market that is traded through a centralized exchange, but that's not necessarily what drives that price. You have a lot of central banks that will be doing currency transactions, and that might be done through futures, might be, okay? But it's not necessary because you have the spot market, you have a whole bunch of other vehicles that are used, financial vehicles, not actual vehicles, to actually come up with some sort of forwards contracts are also something that happens a lot in Forex. If you don't know what forwards are, basically they are very individualized contracts that are also not necessarily on the exchange. So they're done outside of the exchanges, usually between like a couple of players. And the specs on that contract will not be standardized like futures contracts. They will be agreed upon between the two parties that are doing it. It's kind of like you and your friend deciding that they're going to borrow some money from you, and the terms of that contract is going to be between you and your friend, right? It doesn't matter what the exchanges say because you're the ones negotiating the deal, right? So hopefully that makes more sense. And there's a lot of that in Forex. So you can't use volume as any kind of a significant indicator there. But when it comes to gold, platinum, futures contracts, they are standardized and you want to see a particular behavior before you actually get into it. Stop Hunter says, good morning, Dee. Can you explain about DAX, the pros and cons? I would say there are no cons. It's not wicky, it's smooth, it's just liquid enough to not be super crazy, but to also give us 200 to 300 ticks a day. It is an index with an upward bias, so a lot of the times the longs will be the right thing to do. If you're in a short is kind of like hit and run, so see money, take money. Even though they can be pretty juicy, a lot of the days the shorts, unless there's like semi-apocalypse coming or something, comes in like a rate change, some sort of change in the Eurozone, it's not good. Shorts are not going to be it. So therefore, pretty easy from that point of view and super smooth. Like DAX is probably the only product where I feel comfortable trading with size, okay? I have traded like 40 full DAX contracts before, okay? And the P&L ups and downs are really not that bad. It's like once it decides on direction and obviously you get the right setup, it just keeps going. Like there's none of this NQ nonsense where it wags up and down 50 to 100 ticks out of nowhere. It's just smooth. So whenever I want to trade with size, I want to have confidence that that position is going to be stable, if that makes sense. So for me, there are no downside to trading DAX. You have micro DAX, you have mini DAX, you have full DAX. Full DAX is 25 euros. Mini DAX is 5 euros. Micro DAX, 1 euro. So whatever size account that you have the option to control your position sizes really well, like really well. And more so because that DAX mini is only 5 euros, right? But it's not, it's not crazy. It respects levels. It might wag around VWAP by about 10, 15 points, but that's it, right? It's not going to overshoot VWAP. If it overshoots VWAP by 50 ticks, that means you're in a range-bound day. It is not like, it overshot VWAP. It just means that VWAP is not a point of reference that day. It definitely is skewed more towards longs, obviously, because it's an equity index. It follows outer edges of value to a T. In fact, I called a trade out for the CPI last week in my VIP group, and I said, okay, we've hit London value high and the average daily range. So now I want to try fading it from here. And I got full move all the way back up to VWAP, which was like, I think it was like 220 ticks or something. It was crazy. Now obviously the downsides are if you don't know which releases are going to affect them and you like a Muppet trade right into them, right? So NFP, PPIs, PPI not so much, but CPI as the more immediate measure of inflation is really bouncy and very reactive. What else? ZEW can be a little bit, that's German sentiment, that can be a little temperamental, and also the ECB rate decision, that's very reactive. So if you, and NFP also has a huge reaction on DAX. As long as you remember those, you should be fine to just go, okay, let me see what's around. So if you have those orientation points and you know not to trade into some of the larger releases, immediately after, like within the next sort of 5, 10, 15 minutes, you will get your trade. And again, it's not going to be Wickfest, let's just go nuts like NQ does. Once it decides in the direction post the release, you actually have a really nice trade out of it. So very, very simple. I see zero downsides to DAX. I've been trying to convert everybody to trade DAX in the morning and during the first, I mean, it actually moves throughout the year. There are times when it actually moves more for New York. It's not the norm, but it does happen every so often. Right now, we're in a situation where both London and the New York session have about an equal range. That means whichever time of day you decide to trade DAX, you're going to get about 150 ticks out of it, right? As a general movement. So overall, 250 for the average daily range. That is a very, very nice sort of middle ground between just enough liquidity, enough smooth movement, and enough momentum across both sessions without drama. So it's very drama-free. It's not that you can't mess it up, because if you start doing stupid things, you can mess anything up. You can mess corn up because you're like, it's not moving, let me try another 3 trades. And then you're like 3 paper cuts deep, and you're kind of like going, oh, why did I do that? So, the expectation of when something should move and how much it moves can definitely play with your mindset. So I can't say, hey, definitely trade DAX, you're going to be wildly profitable on it, because I don't know what you're doing, right? You could still be in that, beginner mode where you allow your emotions to play with you and you start doing stupid things, and then you're like getting angry because you had one loss or something. So it's like, Black says parenthesis, what's the indicator called, the one you have that shows the volumes? It's called the volume indicator. Like literally it's the volume, yeah? So if you go, here it is, volume. So it's not an indicator. It's like, I suppose it is an indicator because it tracks volume, but it's literally just the volume of the exchange. Even on other platforms, volume might be displayed in a, bit simplistic fashion, just kind of like bars up and down. But this one on Topstep actually shows you. So it's not this one. This is a DMI. This measures momentum. It doesn't have a volume component in its calculation. This one above it, actually, let's make those a little bit more screamy so that everyone can see. Falling. There we go. Oh, that was a good use of the mute button. Sorry, I had to sneeze there. I was trying to time it. We're going to make it. All right, so I've made the volume indicator a little bit more screamy so that you can see what's going on. So you can see it now, right? You can see when the volume is growing to the downside. So here's what you do want to see. So we consolidate, and then on the next drop, it grows, right? And then naturally, as we get to the settlement, because this is already settlement, last half an hour, it drops off. That's fine. But whilst you're looking for a continuation of a move, you really need to have this pop in volume. If you want to look at someone who is like a volume master, watch Coach Jay, because he is the be-all and end-all of volume analysis. I've never seen anyone in the industry explain it so well. And it's not just that, he uses volume. It's the fact that he's such a good coach that he can actually explain to you in great detail so that it's crystal clear. Whereas some of the people that I've met throughout my career, whenever you ask them about volume, it's like, you're looking at rising volume. It's like, what does that mean? Like, where am I looking for it? Like, in general? Where am I looking at it at the very next candle? Like, what time frame am I using? So many questions. But Jay doesn't even get to a point where you need to ask him questions because he already explains it so well. This is why I have the highest respect for him as a trader and a coach. And, it's not the same skill to be a good trader and to be a good coach. Some people are either one or the other, and others are great traders, but they suck at teaching, right? They try and explain to you something and you're like, man, I'm more confused now than I started, right? But kind of armed with some knowledge. How do you use it? No idea. And then you have people who are, excellent coaches, but they can't really translate that into any sort of performance. And, if this was my stream, I would mention someone threw like a cough. But I'm not going to do that right now. So you have a very small amount of people that can do both, right? They can find a good trade and explain to you why the hell the trade is going through. Now, some of us have coaching backgrounds. Like I have a music degree, so if I wanted to be a music professor, I could. Don't want to, but I could. And as a part of all of that, learning and the academia and whatever, you are taught the methodics of teaching others. You are taught the psychology of learning a new skill. And if you can apply that to teaching people trading, that's another thing altogether. It's another skill. And then the delivery. You can have a great teacher, great trader, but their delivery is like so monotonous that you're just falling asleep. Or they have some sort of a hang up. There was this one guy who kept saying, South Park, was it South Park? They had Mr. McKay, if you remember. Why? Because he's constantly going, blah, 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 okay, blah, 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 okay. Right. So there was this guy that was teaching and he did the same thing. So he's like, oh, you have this thing here, McKay. You have this thing, McKay. Yeah, like every second and third word was McKay. It was like just doing my head in. And I was like, I can't listen to this. I really can't. Or you just have people who have very monotonous voices and they just try and explain to you that this is a very interesting setup now developing on GC, but we are looking for increases. It's like, are we listening to a hypnosis tape? Like, what is actually going on here? So, delivery is important. The level of detail is important. Clarity is important. If you've got all of that, you've got something special. You've got a special teacher, special coach. There are people like ICT who's very good at explaining things along with very colorful stories. Let's put him that way. But he doesn't seem to be able to translate that into his own trading. So, there's people like that. Nothing wrong with that. Absolutely nothing wrong with it. Does he still add value to the space? Absolutely, right? But, different folks, different skills, and you get, people on TopstepTV that I think are quite special. When you look at most people who are on there, everybody's pretty good at explaining the trade in like super clarity, and then also showing you how that trade looks. Okay. Now, obviously, we have the randomly distributed probabilities, so it doesn't mean that the setup is always going to work. But then we also say that, right? So I would think that if you can find somebody who is able to keep you engaged, is very knowledgeable, can show you what the setup actually looks like in real time, and can explain to you what is happening ahead of the time. Not like, oh, we have this developing. Yeah, that's one skill. But ahead of the time means you have a level and you want to see something happen there. Barnacle Bob says, Barnacle Bob, I love that name. Gamma wall means more to you on some metals more than others. Yeah, purely because, for example, platinum will follow these gamma walls to a T on a lot of time. So when the gamma wall breaks, usually you get a really good damn trade out of it. That's not the case with GC. Okay, GC can wag. It's a more liquid product. There's more people trading it. And it's a lot more wiki, let's put it that way. So if you get up to 29.30, I can't tell you whether they're first going to go up to 29.40 and 50 and then sell off below 29.30. So in the grand scheme of things, that still means that 29.30 was not able to bring us a sustained move away from it, above it. But if you have platinum, for example, so I'm going to drop down to the 30-minute chart and go to Thursday while I still have these levels. So here's what I want to show you. I was in on this short as well, but I held it a little bit too long in the true D fashion, which is my Achilles heel, always has been. So I was like, okay, I want to see where this followed through here, even though volume has dropped off. But now I'm going to see what's happening. And then it went up to 10.50. Look at this. How much did it overshoot the core resistance by? 1 tick. And then it sold off again. Okay. So that's the difference between platinum using call and put strikes as resistance and support and gold. Now, this is overnight. That gets messy. It doesn't have to mean anything. However, once you've broken it with quite some force, you will then also see that this 10.50 level, if you look closely, it was also a support before we finally broke it. Now, Asia, again, breaks it to the downside. They are reactive up and down, depends on where you're located price-wise. So on the first try, they break it by 2 ticks and then immediately continue. This is like Asia. It's overnight. We're getting to the last hour of Tokyo. And then you have London that starts to, well, actually it was Eurex, starts to sell off. Where does it stop? Oh, look, 10.50. Yes, it broke it by a whole 10 ticks. But, it's 10 ticks. It's not 50 and 100. 10 ticks we can absorb in one single 35-tick stop. And then the next try, again, they hit it to the tick. But this is already now 1, 2, 3 tests. 3 tests of the same area. And the next test, you're looking for that increase in volume. And you get it a little bit here. So it flips here, finally starts growing. And then you get the final move, which keeps growing. Okay? That's the break. So you have 1 test, 2nd test, 3rd test, smash. Kind of like 1 tequila, 2 tequila, 3 tequila, floor. Keep that reference in mind. Next time you're looking for breakages of levels, right? So you are looking for 3 tests before the break. Sometimes it's 2, but a lot of the times they will test it 3 times, and then on the 4th try, the level budges. Gianni says, hi Dee, why does the volume and low-high volume areas change with time frame? Also, if I use a fixed range. If you use a fixed range, I don't know why that would change, unless you have more volume coming in with time. Now, fixed range works with time, okay? So you have a time that you're looking at, let's say from London Open until now. That would be a fixed range volume. But then if you let it keep going, it's going to keep plotting, okay? That will change the volume. Now with the visible range, that is stuck to whatever you have on the chart right now, like me, right? So if I start to move it, it's going to move. And if you change time frames, if we go down to a 5-minute chart, you're going to get a micro view of whatever they're doing. Okay, so the volumes on a micro chart, just like when you are, let's say you're looking at the 4-hour chart and then you drop down to a 5-minute chart. It's not going to be the same, is it? Sometimes a 4-hour chart might look very bearish, but a 5-minute chart looks bullish as hell, right? Higher highs, higher lows. So then what to do? I always say trust the higher time frame. So look for a pullback, and then that will be your reference point for whatever they do on the low time frame, because lower time frames have a lot of noise. Keep that in mind. With a fixed range, like I said, just be careful that if you have, like, let's say I want to do fixed range from about 8 up to now, and then I leave that on. I'll leave it on. it's going to keep going with a new, so it's fixed range up until now. It's not just fixed range up until here. If you want to go back in time and only do the fixed range for, let's say, Asia, then it will cut it off, right? But if you're kind of dragging it along the current time frame, and you specify it to go dragging all the way to the final candle that we have right now, it's going to keep plotting, okay? It's going to keep plotting. This is why I don't really use the fixed range. I know some people do, but I prefer the TPO profile from the market profile, because that one is a lot clearer what you're doing and how you're doing it. So let's just, let me show you on DAX, for example. So on DAX, my indicator we decided to make so that it really tells me exactly when the sessions are ending. And it doesn't plot that profile any further than that. You can extend lines to see where the current session previous day lines are, but it doesn't keep plotting past the thing that you define in the session schedules. So it's going to cut it off wherever this is done. So I want to keep that on, but I want to keep the entire Euro session like that. So now I can see that there was the Friday New York value down here. This was Asia. This is London. So it's very clearly graphically delineated so that I don't mix and match. With a fixed volume range, I always find that most of the indicators that we have right now are a bit messy, to be honest, and they're like mixing apples and oranges, and you have to sort of do backflips and do rain dances to actually make them do what you want them to do. But we coded ours so that it's like pretty easy to use. There's a lot of functionality, but it works straight out of the box. So yeah, hopefully that explains why it keeps plotting, because you're plotting from whenever you started it to now, and then it will keep plotting. Tushar says, have you ever gone from 60 ticks up to down to 60? Yeah, but I have, but not on 60 ticks. I have gone to 180 ticks down to 120 ticks, okay? I have my default risk reward. So for some of the most normal trades that I do on most days, that's 2R multiples. However, there's a caveat. I do like to use, I call it the 3-minute rule. So once I get to a statistically viable profit, which is anything over 1.5. So let's say I'm getting 1.5, it's going over, gets up to 1.7, and then starts to mess around. I give it 3 minutes to hit the full target. If it doesn't hit it, I take it off. And we're talking intraday trades that are pretty quick, right? If it's a swing trade, there's nothing to handle emotionally for me anymore. Like, if you asked me that same question 10 years ago, my answer probably would have been different, because I was a newer trader with less experience. Now, if I see a setup that I know has a potential to go for 400 ticks, I know that I want to get at least 200 out of that. So if it's wagging up and down throughout the day over the course of 4 hours, but not breaking any of my orientation points, and I have orientation points of the way up and down, I have nothing to do. Like, there's nothing to do. But also, you can see this ribbon if you really want to manage your trades in any sort of way. However, again, you have to take the product that you're trading. If you're trading something that's like NQ, you can't use this technique with the ribbon, because it just wags up and down too much. But basically, if you want to be on a short, as long as the market is short underneath the ribbon, you stay in. If it starts to hang above the ribbon, completely outside of it to the opposite side of your trade, that's your exit point. But for me, I don't have emotional issues. I don't connect my emotional well-being to my P&L. I couldn't frankly give a shit. Okay. And if you still do, it means that you need to still work on yourself to not be bothered by it. It means that you're letting your fight or flight response run your trading. And to me, it really doesn't matter whether I'm smashing it or I'm in a drawdown. I feel the same. I don't feel uncomfortable if I've lost a bit of money. And I also don't feel super elated that I gained some money, even if it's a significant amount of money. It's just money. And I can tell you now, from a point of being 44 and having gone through huge ups and downs, there's no amount of money that you can't spend. And the more money that you have, the more your bills will grow. So even if you think, oh yeah, I'll be so carefree once I have a certain amount of cash. Yeah, if you have kids, you're going to be paying for private schools because your standard of living has gone up. You'll have a bigger house that costs more money to run. Your bills will go higher. You will probably have a spouse who wants stuff. Sometimes I've even seen traders have wives that for no reason whatsoever decide to spend £1 million pounds on a new kitchen. And you're like, what was wrong with our old kitchen, So from that point of view, if you think your life is going to be all hunky-dory, remember that song, More Money, More Problems. And I'm telling you this as in the most truthful way. Unless you're like super careful with money, even then, some people are going to think that you're stingy with your cash. So you can't win either way. Therefore, why be bothered by it, right? However, if you're still bothered by, losing X amount of ticks because you were planning for 80 ticks, but you only get 60 and then it comes back down to 20, you actually need to go back to data and see why that happened. Because clearly that 80 tick target was a little bit too ambitious for the setup that you were looking at, or maybe the time of day that you were looking at. Maybe it was a quieter time of day. There could be a number of reasons, but data is your friend. Go back, see why that happened. Go back in time, see how many times you did that same setup. And if you don't know what the setup is, define it. Define it, arm yourself with that knowledge, and then next time it appears, track the maximum favorable excursion, MFE. Very fancy way of saying how far into profit did the trade get to until it turned on you. Okay, that's what MFE is. It's nothing more, nothing less. You have the maximum adverse excursion that tracks how much it dragged down against you. So that's another thing. But over here, just by the fact that you're basically working with a setup where, you're obviously shooting past the 80 ticks. Clearly you're shooting past 80 ticks, because otherwise you would have taken profits and you wouldn't have had the wag from 60 ticks down to 20 ticks up to 80 ticks. That tells me you're trading something that's very volatile like GC, NQ, maybe even YM, right? If that's the case, it's just the nature of the product, nothing more. So NQ wags up and down like crazy, and you have to live with it. If you can't live with it, change the product. It's not the only one. All right, guys, that is it. I have to get down to storage because, like I said, I will be moving to Surrey in the next sort of 2 months or so. However, that means we have to start the laborious process of moving our crap into storage. And just one last question. Best trades, where do you get your options data from? Well, you can look at the options chain, but I use MentorQ that have a query bot that you can just drag out the biggest options levels, and they plot them on the chart either as calls, puts, or gamma exposure levels marked 1 to 10, which it delineates basically the size of the gamma exposure, like how much interest is around there. It can be a little bit of a doozy to grapple when you first add it, but it is useful. Even if you're just going to be looking at calls, puts, and HVLs, it's still a useful thing to have. But they are not always to be done like, oh, call is there, so therefore I'm just going to sell it. If you get call buying around that level, it will get broken. So you need to learn a little bit more about how to actually use that. Thank you for being with me. If you are not on Discord, why? We have over 100,000 people there. So I'm going to plop in the link in the chat. I'm a VIP coach over there as well. So I have been spending a lot more time in Discord. Somebody's saying, what am I observing with Japanese yen? Nothing. I'm not trading Japanese yen and haven't done so in about 8 years. So I think Coach Paul is the best one for that, Monica. Coach Paul looks at it and tracks it quite frequently. So please go to @thebuzzer. Coach Paul is your man. Okay. Let me see what else. We are looking for traders to come and trade with us on TopstepTV. To share your story, right? It doesn't matter whether you're on the big board or you're still jabbing away at your trading combine. You may be a new trader, you just started trading and you found Topstep. If you want to mix it up with the crew, we want to see you. Put your name in the ring by filling out the form that I'm going to post in the chat. There we go. Remember, it's a short one. It's President's Day, so make sure you are flat. If you're in the live account, make sure you're flat by 5:45 p.m. London time. Don't ask me what's that in CT. I think it's like 11:45 or something. But basically, this is it. I will see you again tomorrow for another edition of the London session. I'm Marcus Stalker, Dee. This is the London session on TopstepTV. My Eastern European side is coming out. And that's it. Take care.